Go to Martin Place, the Reserve Bank's head office, where Ed Boyd is there with the senior economist for Westpac, Matthew Hassan. Ed?
Thanks, Ross. Yep, we're here outside the RBA's headquarters. I'm joined by Matt Hassan from Westpac. Matt, cash rate on hold at 4.1%. This was pretty much expected, wasn't it?
Look, markets were a little bit divided on what would happen today, but there was a chance for a pause clearly going into today's meeting, and it looks like we've got that result, although with a pretty clear warning that further interest rate rises may be required. In part, this is about the RBA resetting its forecast. We'll get another round, a refresh of the RBA's inflation and growth forecast in August, and of course we'll have a pretty important CPI update between now and then. This is an indication the RBA just wants to see exactly how that forecast is evolving and what that exact CPI result will be.
Yeah, the RBA in its statement says further tightening of monetary policy may be necessary. How high are you pricing in the cash rate to potentially reach in Australia?
Look, we think there's another 2 rate hikes still to come before we see off this inflation threat. Probably the biggest glimmer of hope in today's decision was the decision statement noting that inflation in Australia has passed its peak. And we saw that with the most recent May update from the CPI indicator that we are now moving lower, but it's still too high. Most reliable measures of ongoing inflation is still north of 6%. We think when the June quarter update comes through, it'll still have a 6 handle on it for annual inflation. Not quite enough of a slowdown to get the RBA really easing in its concerns about the prospect for inflation becoming embedded. And meanwhile, we've still got a very tight labour market that's starting to see some wage pressures emerge. So we think there's still 2 more hikes from the bank before this cycle is done. But we're into the nervy high end of the rate tightening cycle, and it's going to be a bit more of a month-to-month proposition, clearly.
Yeah, and those 2 additional rate rises, are you expecting one just as soon as next month?
Well, look, we would expect another rate hike next month in August. We'll have to review the exact wording that the governor's come out with, and of course we do have some important data updates between now and then. But to now mind, the case for a further tightening is still pretty strong. That headline inflation rate is still far too high. The labour market's still seeing unemployment at 50-year lows. Only a very gradual easing and very tight labour market conditions so far. And the wage side is starting to move. There's not a lot of margin of error for the RBA to achieve this narrow path back to stable inflation. And we think it'll look to take out some more insurance with rates in the next few months.
Yeah, RBA Governor Philip Lowe speaks next week in Brisbane at a business event. Do you think wages is going to be top of his mind? Because we've seen the minimum wage increase almost 6% on the 1st of July just a few days ago. Is that going to be a big concern for him, adding to inflation in the economy?
Almost certainly. Alongside that minimum wage decision, we've had data out today about enterprise agreements are starting to show a lift. They've been pretty benign to date. They're starting to lift towards 4% annual wage growth. We also know there's a decent chunk of wage agreements in place that have a CPI adjustment that will be rolling through from July 1. Pretty hefty 7% increase for those particular agreements. So without a doubt, wages are going to be a focal point. But as today's decision statement highlights, it's also the productivity side of that story as well. It's not simply about wages pressuring inflation medium term. It's a very weak productivity growth environment that's seeing unit costs rising more strongly for businesses, meaning that they have to pass on more of the cost increases. It means that we're stuck in this inflation environment for longer.
Matt Hassan from Westpac, thanks so much for your time.
You're welcome. Cheers.
Well, Andrew, there you have it. Cash rate on hold, which is what was expected, but it sounds like we can expect a couple more interest rate rises before the end of this year. So the RBA is obviously not done yet at 4.1%. Unfortunately, we're going to see more rate hikes in the coming months.